less than 2 months until the U.S. Presidential election. Donald Trump and Kamala Harris will face off in their first debate today. Let's get expectations for emerging markets and how to hedge against U.S. politics at this time for the markets, because definitely volatility. We might see volatility in these markets. Join us for that conversation. We have Mr. Kalu Aja as a financial analyst. Great to have you on the show.
Hey, Larry, how you doing? Welcome back.
Thank you. Thank you. It's great to be back. So looking at both candidates this time, which policies scare you or give you some kind of confidence, for emerging markets?
Gotcha. I mean, let's look at Kamala Harris. The Democrats want to do green energy. So for the NNPC, that's scary because all they're going to do is maybe take NNPC to a lawsuit in New York or restrict supply of gas or crude oil. And that's affect Nigeria's foreign revenues, right? So that's a very, very big one. Remember, this already happened before the Ukraine war. They are restricting credits and loans to oil and gas. So that part scares me. Donald Trump, the part that scares me is that he wants to now do fossil fuels export. So the U.S. is going to export more gas and more oil to our traditional markets, say India, our largest market, very friendly with the U.S. The U.S. is now an oil exporter. So we're looking at green energy versus increased competition. And out of the two, I think the green energy is going to hurt Nigeria more if it does happen under the Democrats and Kamala Harris.
And definitely, looking at oil prices now, we're seeing that movement down, still continuing weakness right there. Some say, it's demand issues with China. But is this a sign of things to come, in the oil market? Do you see sub $60 for both Brent and WTI at some point?
That's what the markets are saying already. Trafalgar is saying essentially $60 a barrel is going to happen because of weak Chinese demand. And also the U.S. People are worried about the U.S. economic growth, that it might not be as robust as we see. Jobless are already happening. So the oil market is basically tamping down, even with OPEC restricting output. So the smart money is on oil prices coming down just a notch. How low? We do not know yet, but we have to start to plan towards oil prices receding from 80 to about 65 and all that. Yeah.
And, definitely we've had Trump as president, before now. Yeah. But tell me how that impacted Nigeria, when he was president, and what you expect for a new Trump presidency if that actually happens for emerging markets like Nigeria.
Yeah, Trump is speaking to trade, but reciprocal trade. So essentially, if you don't put tariffs on him, he won't put tariffs on you. But this time, Trump wants to fund the U.S. government, the U.S. deficits by tariffs on imports across the board. He wants to impose more tariffs on Chinese goods and less tariffs on goods coming from non-Chinese sources. So Mexico is seeing a huge surge of Chinese manufacturing in Mexico supplied to America. But Trump's already saying he's going to tax those. So it presents an opportunity for Nigeria. If we're able to manufacture in Nigeria, even with the Chinese companies here, and export to the U.S., we have a lower tariff. So that might be a loophole for Nigeria to then access foreign investment that would then build plants here in Nigeria to export to the U.S., because that's what he wants to do, to really tamp down on Chinese imports into America. In terms of oil and gas, like I've said, I'm worried that he's going to compete with the NNPC and our oil exports by also exporting U.S. oil. So it's a big worry for me there. But I think overall, it might be positive in terms of the trade remittances. It's more of an open guy, like you can trade as long as you pay taxes and all that. So that's the green line in there.
And now let's get a check on the U.S. dollar. We've seen the DXY, that's come down for some time now, but we're seeing some recovery right there. And I remember Trump did actually say that, most of these countries that are, beating the drums of de-dollarization when it comes to international trade, he's saying, if you're not going to trade in the dollar, expect about 100% tariffs. What do you think this is going to do to trade?
Well, the Fed's interest rates are coming down. That's why the index is also coming down. The Fed is going to cut rates. So, of course, that will weaken the dollar a bit. You've seen the Chinese leave or try to leave dollar, right, to buy more gold, to copy what the Russians have done. But I don't see the dollar going anywhere soon. The dollar is still the dominant reserve currency for settlements globally. That's not going to change. We're going to have maybe countries having an alternative to the dollar to say we're going to maybe diversify our foreign reserves into, say, yuan or into the euros. But the dollar is still dominant as the number one exchange currency in the world. So Trump is also talking crypto, but I think he's going to keep pushing that number one thing, strong dollar. He likes a strong dollar. He likes a strong balance of trade. He wants that, that's strong America first sentiment. So, but he also wants a weaker interest rate on the dollar because that makes America more competitive. So that helps emerging currencies like the Naira, because if it's US dollar is weak, then of course the Naira becomes an alternative to then invest and get those high yields. Yeah.
Right, and now everyone's expecting the U.S. Fed to actually cut rates for the meeting, this month, and maybe about 5 rate cuts going forward. What would you say the trading strategy should be? Is it time to dump the dollar?
I mean, if you find any long-term dollar investment, you should take it. Anyone that's paying you a high yield, because right now in America, rates are 4-5%, and those are really for, say, 6 months, 7 months. If you find something longer in dollar, take it, because the dollar is a safe hedge. It shouldn't pay you that much. So if you do find it, take it. You see the Nigerian dollar bond, I hear was oversubscribed, great yield on that. So the dollar, the light is going to be here for a very, very long time. But because it's a safe and secure currency, it shouldn't pay that much in terms of the yield that it's paying right now. So anywhere you see you want to go long dollar with high yields, I would say take it. After the Fed starts to cut rate, you're going to see that, the commodities are going to start to come into play apart from the dollar. So that's what we're seeing. But for now, it's go long on the dollar if the rates are high. That's what we're going to be for now, till after the elections for now. Yeah.
Right. So everyone's looking forward to the debate tonight. Trump-Harris. What are you expecting?
It's going to be a very disciplined Trump. I think we saw that with Biden, where he was very disciplined, didn't interrupt. I think the Kamala Harris team tried to unmute the mics. They wanted to catch Trump on a hot mic, interrupt him, prosecute him, make him say something and then go viral. The feeling here is that Kamala Harris has not talked to the press, and she's trying to do a kamikaze on Trump, do one debate, kill him off, and then go back. So this time it hasn't worked. They're going to basically talk on their policies. She released her policy statements just yesterday, very, very detailed on what she wants to do. So Trump's going to try to hold her account to that on why her positions have changed. And she's going to try to hold him to account of how he's a felon and how he tried to boost up democracy. So it's going to be an interesting debate on two very, very different candidates, different approaches with two separate visions for America.
I will definitely be watching out for that, hoping for more policy talk and less trash talking for this debate. Thank you so much. Always great having your perspective, Mr. Kalu Aja, financial analyst.
All right, buddy.
Thank you so much.
You're welcome. Have a good one.
You too.